One thing that's not winding down, at least in terms of investing so far, is the bull market out there. It's been going on for years now, and this was after the result of the Great Recession, and everything was in upheaval with the financial world, and yet stocks bounce back, not just in a big way, in a huge way, which begets the question, why are there so many people not taking part? Over half of Americans are not in the stock market at all. And it's not like I'm sitting here advocating to be in the stock market. That's for other people to do. It's just curious because whenever we see these downtimes, historically, we've seen the bounce back. And in my lifetime, the biggest downtime was the recession, the Great Recession. And here comes the bounce back. So why aren't more people getting involved? Well, to discuss this morning, to see if it's too late to come to the party, is financial strategist Clark Hodges, who's here. Good morning, Clark.
Good morning. How are you today?
I'm doing pretty good. So why are so many people staying out? Why aren't they taking advantage? And is there one reason, or is it a multitude of reasons?
I think the main reason is they feel like you have to have a lot of money to invest in the stock market, and that precludes people from even considering it. I think if you knew the facts that that's really just not the case, a lot of people would actually go about their monthly lives spending money a little differently because they'd realize that even with $50 a month, it could really make a difference in your future and your growing of your net worth over time.
So they see a television show, they watch some drama, and a person says, I made a killing in the market. I invested $100,000, and now I'm $500,000 up on my. And they think that that's the kind of investing we're talking about. Where, like you just said, it's little bits and pieces here and there, and putting something in when you have it, whatever that may be.
Right. I mean, there's a phrase out there in our industry, dollar cost averaging.
Right.
It's a very common thing with mutual fund investing. And mutual fund investing, to me, is one of the unrecognizable benefits of living in this country. You can buy American companies through a mutual fund, so you're owning pieces of American companies. And if those companies do well, you're going to do well. And you can invest as little as $50 on a monthly basis into that fund. And I tell you what, the people who don't realize that's an option, they need to wake up and understand that that's an option for them. And what they're doing for themselves is they're putting money into a place where they can beat inflation. One of the main issues in life is your money's not going to buy as much 10 years from now as it does today. And you need to have some of your money working to beat inflation. And by owning $50 a month into a mutual fund, by owning these companies, you're a little mini Warren Buffett. You're benefiting if companies do well. So if you're spending money at Apple Computer, if you're spending money at Costco, if you're spending money at McDonald's, you're basically helping those companies do well. Why not be on the same side of the table as them and increase your net worth over time? And I think a lot of people don't understand you can do it, $50 a month.
Well, Clark, this poll, a recent poll here, found that 9%, there's some bad news here for you, but really there's an upside, found that 9% of non-investors said their skittishness was rooted in their distrust of stockbrokers or advisors. But I got to tell you, you're already doing 60% better than Congress there in terms of distrust, okay? So really 9% isn't bad at all. That means that 91% feel pretty good with their person, and it does help. You can do all the online stuff you want, but it does help to have somebody to bounce ideas off of or to listen to when you feel like maybe you're out there floating on an island. It is a benefit for a lot of people, isn't it?
It really is. I mean, think about it. I mean, you do your job all day long. If I have a question about radio, I'm going to call you and ask you a question because you do it all the time. You've been doing it for years. The same concept is with financial advisors. You want somebody that's in the market, understanding how it works, basically understanding companies, and that way you can go about your day and just worry about your job. But you know somebody who's spending time on it, it's gonna know more than you, really. A lot of investing is observation and just knowing what's out there and stuff like that. But when it comes to the details of investing, when and how to handle adversity and how to handle bad markets and bad days and such like that, it really does help to have a professional who's been through a lot, seen a lot, give you that advice and help you off the ledge, so to speak, when it comes to some bad times in the market.
You know, I was about to use that phrase, and it's no secret that that comes from your business about 80 years ago, roughly, talking somebody off the ledge, because for every downtime, there has been traditionally a bounce back. If we can count it, we don't know exactly how quick it'll occur, but it does seem to always occur, correct?
It does occur. It's a fact of life. You know, even bull markets have bear times, have corrections in them. And we've had a really good market for 6 years. The low was in 2009. But the previous 10 years before that was a horrible time for equity investing. And traditionally, 10-year time frame, you're going to get 7, 8 good years out of the market where it goes up more than it goes down. So we're due for a time where the market goes up. Now, nothing goes straight up. Mm-hmm. But the good thing is when you do have a correction or a pullback, and you're doing that dollar cost average, that $50 a month when the market's high buys a little bit less. But when the market's low, it buys more. So you're adding to it by buying when it's low. And the old adage is you want to buy low and sell high.
Right.
And you're buying more at the lower price. That's very good for your overall cost basis. And it's a real smart thing to do. Being in the business for over 22 years, I can tell you unequivocally, you'd be shocked at the little amounts of money I've seen people invest in mutual funds on a monthly basis and what it's turned into, even given 2008, what a bad year that was.
Clark Hodges says it's not too late to join the party, financial strategist. We appreciate, Clark, you being on the show this morning.
I really appreciate being on. I hope you have a great day. Thanks a lot.